Hey everyone, it's Shauna the Tax Goddess and Chief Tax Strategist for taxgoddess.com and bigtaxdrop.com. I'm super happy to be here with you guys today on our channel, Tax Strategies that Save Entrepreneurs Thousands each year. We are here and dedicated to helping business owners reduce their tax burdens in all the legal ways possible. So in today's video, we're going to be talking about the things that you should be doing. We're in the heat of tax season, right? What you guys should be doing here in the heat of tax season to make sure that you're getting all of the deductions that you deserve. So if this is your first time here with us at Tax Strategies that Save Business Entrepreneurs Thousands each year, please subscribe to our YouTube channel, and don't forget you can download our free ebook on 10 ways to save 10K right now. And of course, check out our website at bigtaxdrop.com. So let's jump right in. Okay, one of the most important things, and really honestly, I see business owners do this all the time. One of the most important things is to review your books. I know that sounds super boring. I got it. Okay. But if you're not looking at your numbers, your bookkeeper, if you have a bookkeeper or, your spouse is doing your books or whatever it is, if you're not actually actively looking, not only at the bottom line, right? I know we all do it as business owners. We're like, wait, did I make money or not? What's going on that very bottom line? I would recommend that you actually look at the categorization of your expenses. Especially with some of these 2018 tax law changes. For example, entertainment is no longer deductible in 2018. Make sure that your bookkeeper isn't continuing to put deductions in that entertainment category, okay? So definitely take a look at your income, take a look at your expenses, take a look at your cost of goods sold numbers. I would also recommend that you look at the trends, okay? The IRS has computer system software in the background that look at the trends of a business. So if your income went up, they would expect to see your expenses also go up. If your income came way down, your expenses hopefully would have also come way down, okay? If you're making major increases or decreases in revenue or expenses, just be prepared that they may ask you about it, okay? I mean, especially, I'd say 15 to 20%, you're probably okay. But if you've had a 70% increase in income or a 70% decrease in income, they may question you on that, okay? So make sure you're looking at your numbers before you submit them to your CPA, to your tax preparer, so that you know that everything is in the right categorization and you're happy with the numbers that you are going to be submitting on the tax return, okay? Now, I want to move on to investments. Okay, there are some very specific requirements when it comes to reporting your investments. And one of the biggest things that I see, I know not everybody has foreign investments, but if you own assets, if you have signature authority over a foreign bank account, if you have anything in any foreign countries, there are some extremely specific and extremely high penalty issues that can go along with foreign investments. Okay. So make sure you're checking with your CPA, your tax strategist, whether or not any of those are going to apply to you. Definitely you're looking at something called the FinCEN, F-I-N-C-E-N, so feel free to Google that. Yeah, there are some super specific regulations, $10,000 penalties if you do it wrong. So please, 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 if you have any kind of foreign investment whatsoever, make sure you're pointing that out to your CPA, to your tax preparer. And of course, speak with your tax strategist. Is there some better way that I should be doing this or handling this? Okay. Charitable donations. Now, 2017, charitable donations are still a really big thing, okay? If you're here in Arizona, local where we are, you still had for 2017, you had the federal level deduction for the Arizona credits, okay? 2018, that still exists, but remember in 2018, your itemized deductions, you may or may not itemize. Okay, just depending on how big your itemized deductions are. So make sure that you're working with your tax strategist and your CPA, both, right, to make sure that if you're going to continue to do donations in 2018, you're doing them the right way to make sure that you're getting the best donation value for that. Okay, and that could be in a charitable remainder trust. That could be in a charitable lifetime annuity. There's all sorts of different ways to do charity. If you've never heard of the two things that I just mentioned, reach out to tax strategy people. Okay, reach out to us. We're happy to help and explain. Okay. file early to avoid fraudsters. Now, this is a very common piece of advice, okay? And I'm actually going to go, nix. I'm kind of nix on this. I do absolutely believe, okay, that if you are a W-2 employee, file early, okay? If you have your income, you have your interest, maybe even you have a mortgage, as soon as you have your information, get that puppy filed. However, if you are a business owner, I am a huge fan of filing an extension, and I'll tell you why, okay? There are things that if you rush, for example, your bookkeeping, for example, your strategies, okay? If you rush to file your tax return early and later, a month later, 2 months later, you find something in your books, something that you could have changed or tweaked to give you a better tax return, amending a tax return does increase your chances of being audited. It just does, okay? So I'm a big, big fan. Filing an extension, make sure that your bookkeeper's on the same page as your CPA, who's on the same page as your tax strategist, okay, who potentially is even on the same page as your attorney, all right? Filing a tax return for a business owner, especially as you guys get bigger and more complicated, this is not something that I recommend that you rush, okay? There could be research. We've just had a case recently where, you know, one of our clients hired someone in a different state. They didn't realize that that means that now they had to file a separate state return, potentially franchise tax returns, potentially sales tax returns. Thank goodness they were using a payroll company, so they paid the proper sales or payroll taxes. So, you know, there's lots of cases where research and knowledge and communication, as usual, are key for clients, for you, to make sure that you're filing the right return. And of course, getting the best tax benefit for your buck, right? If you're making decisions like hiring someone in a foreign state, please reach out to your CPA and your tax strategist long before the filing time for the tax returns. That was kind of a little mini rant. Anyway, so call out, ask for help, reach out to the professional team that you've put together, right? Their job is to be here to support you, all right? So, yay, tax filing season! File extensions, business owners, file extensions. Get it right the first time. All right. Anyway, thanks so much for joining us here today. Sorry about the little mini rant. We always want to bring you guys value in the form of education, entertainment, inspiration. You know, please leave us any questions, comments, anything that you'd like us to cover in our upcoming videos down in the comments below. And, you know, please subscribe. If this is your first time here, we would absolutely love to continue to bring you this education, the entertainment, and the inspiration of being a member of our channel, Tax Strategies That Save Entrepreneurs Thousands Each Year. So feel free to check us out on bigtaxdrop.com for more information. Signing off with some tax love, your tax goddess and chief tax strategist, Shauna. Thanks, guys. Bye.